Assalamualaikum warahmatullahi wabarakatuh and welcome everyone to our forum today. My name is Nur Mazati Iman Binti Asharuddin, matrix number 291648, your moderator for today. For today's forum, we will be discussing about the differences between conventional mortgage loans and Islamic home financing purchases, specifically focusing on Maybank's product disclosure sheet. As home buyers, understanding the financial products available to us is crucial for making informed decisions that align with our financial purchases, financial goals, and ethical beliefs. Conventional mortgage loans and Islamic home financing purchases offer distinct approaches to property ownership and financing, each with its own unique principles and benefits. So, in this forum, we will explore three main important points. The first one is conventional mortgage loans. Secondly is Islamic home financing purchases. And thirdly, we will explore about the comparative analysis, which we will compare the two financing options between conventional and Islamic home purchases. Therefore, we are pleased to have experts and experienced customers here to share their insights and answer a few questions. Let's dive into this important topic and equip ourselves with the knowledge needed to choose the right home financing solution. There are four panels with us today. Can you introduce yourselves?
Assalamualaikum, and my name is Nurul Izzati binti Uthman, nombor matric 291727.
Assalamualaikum, my name is Husna Sofia Humaira binti Husairi, matrix number 293666.
Hi, Assalamualaikum. My name is Nura Akila binti Abdul Ghani and my matric number is 294305.
Assalamualaikum, my name is Nur Najah binti Muhammad Nazim, my matric number 293987.
Alright, thank you our respected panels. So we will proceed this forum with the first question for Ms. Izzati. Ms. Izzati, can you explain the differences between mortgage loans and Islamic home financing purchases?
Okay, thank you moderator for the question. I would like to share the differences between mortgage loans and Islamic mortgage product, which is often referred to home financing purchase. Here are the key distinctions. Firstly, basis of financing. Mortgage loan basis of financing involve lending money by a financial institution to a borrower. The obligation who repays the loan amount borrowed is include interest payment over a predetermined period, while home financing purchase based on Islamic finance principle. Home financing purchases, particularly in Islamic finance, adhere to Sharia principle such as avoiding riba interest and emphasizing profit-sharing arrangement like murabahah, which is cost-plus financing, or ijarah, which is leasing, where the Islamic bank or institution partners with the buyer in purchasing the property. Secondly is risk-sharing. The borrower bears all risks associated with the property, including maintenance and market fluctuation. The lender risk is primarily in ensuring repayment of the loan. While home financing purchases, the lender bears the risk. Home financing purchases involve risk sharing between the financial institution and the buyer, reflecting the partnership aspect of Islamic finance. That's all from me. Thank you.
Okay, thank you, Ms. Izzati. So from what Ms. Izzati explained just now, conventional mortgage loans involve a financial institution lending money to a borrower who repays the loan with interest over time bearing all property-related risks. But in contrast, Islamic home financing purchases adheres to Sharia principle, avoiding riba and emphasizing profit-sharing arrangement like murabaha or ijarah. So, moving on to the next panel, the question for Ms. Husna is, what are the financial issues in Islam that can be traced?
Thank you for your question, moderator. Islamic finance face several challenges and issues, including the first one is, of course, due to lack of awareness. Many individuals and businesses are not truly aware of the principles and benefit of Islamic finance, which causes market penetration and Islamic finance to be limited compared to conventional finance and markets. They are more confident and believe in the conventional financial system than the Islamic financial system itself. The next is product innovation, which is still backward. Islamic financial products need to be developed to meet changing customer needs and compete effectively, just like conventional financial products. In this modern age, the financial system and Islamic market also need to be up to date and quickly follow the hype of the latest developments so as not to be left behind and forgotten. And the last one is global recognition. Although the growth of Islamic finance has been quite significant in recent times, but Islamic finance still lacks widespread of recognition and acceptance. This causes the potential for the development and integration of the Islamic financial system to be limited in today's mainstream financial system. That's all from me.
Thank you, Ms. Husna, for your explanation just now. So, based on your explanation, Islamic finance faces several challenges, which are lack of awareness, lacks of products innovation that need development to meet modern customer needs and compete effectively. And lastly, Islamic finance still lacks of widespread global recognition and acceptance, limiting its development and integration into the mainstream financial system. Am I right, Ms. Husna?
Yes, you are right.
Okay. Next, for Ms. Akila, the question for you is, what is the formula used to calculate the monthly installment for a conventional mortgage loan and how it is applied?
Alright, okay. Thank you, moderator, for the question. Okay, so the monthly installment for a conventional mortgage loan is typically calculated using the following formula, which is monthly installment equal to, in bracket, loan amount, multiple interest rate, multiple 1 plus interest rate, and multiple loan tenure. And then the total will divide with 1 plus interest rate and multiple loan tenure minus 1. So by calculating the above, it will get the monthly installment amount, and this helps borrowers understand their monthly repayment obligations based on the loan amount, interest rate, and tenure. Okay, so that's all for the question. Yes.
Thank you, Miss Akila, for answering the question. But Miss Akila, what is the concept of Sharia compliance in Islamic home financing purchases, and how does it differ from conventional mortgage loans?
Alright, thank you for the question. Okay, so the concept of Sharia compliance, Islamic home financing products are structured to comply with Sharia Islamic law principles, and the key concept is avoiding riba, which is interest, and it is prohibited in Islam. Instead, these products use profit sharing and trade-based contracts. So among there is number one is commodity murabaha, which is cost plus profit. This is a common Sharia compliant contract used in Islamic home financing, and the bank purchases a commodity, which is usually metals, and sells it to the customer at a cost plus a pre-agreed profit margin, and the customer then pays for the commodity in installments. And the second one is tawarruk arrangement. The customer purchases the commodity from the bank on a deferred payment basis, and the customer then sells the commodity to a third party to obtain cash, which is used to purchase the property. Then, for the difference from conventional mortgage loans are it have no interest, which is riba, ownership transfer, and using Sharia compliance. And in understanding this concept, customers can see that instead of paying interest, they are paying a pre-agreed profit to the bank, and they also understand that the financing is structured to be ethical and in compliance with their religious beliefs. So I think that's all from me.
Okay, thank you, Miss Akila. Now I am getting a clear understanding about the different concept of Islamic home financing purchase and conventional mortgage loans. So from what you've been saying just now, Islamic home financing products adhere to Sharia principles by avoiding riba and instead using profit sharing and trade-based contracts. And also the common methods used including commodity marwaha and tawarruk. Unlike conventional mortgage loans, these products do not involve interest and ensure ownership, transfer, and Sharia compliance. And lastly, question for our last panel, Ms. Najah. How do early repayment options compare between conventional and Islamic home financing?
Thank you, moderator, for the question. The answer for the question is in conventional mortgages, early repayment might incur penalties depending on the loan agreement. In Islamic financing, early repayment term can vary. For example, in murabaha, the bank might allow the borrower to pay off the remaining balance early without additional charge, while in ijara, the lease agreement might include specific term for early termination. The term are typically more flexible to comply with ethical consideration in Islamic finance. That's all for the question.
Okay, thank you, Ms. Najah. But Ms. Najah, can we know how does the interest component differ between conventional mortgages and Islamic home financing?
Thank you for the question. In conventional mortgages, the borrower pay interest on the loan amount. The interest is the lender profit for providing the loans. In contrast, Islamic home financing does not involve interest. Instead, profit is made through other means such as marking up the price of the property in a murabaha agreement for earning rent in a ijara agreement. That's all from me.
I see. Okay, thank you again, Ms. Najah, for answering the questions. So in conventional mortgages, the lender profits through the interest paid by the borrower on the loan amount. In contrast, Islamic home financing avoids interest and generates profit through alternative methods. So with that, it is the end of our forum for today. Thank you to our respected panels for the insightful contributions to our discussion on the differences between conventional mortgage loans and Islamic home financing purchases in Maybank product disclosure sheet. We hope this forum has provided you with valuable information and a clearer understanding of your options. If you have any further questions or need more detailed advice, Please do not hesitate to reach out to financial experts or institutions like Maybank for personalized guidance. Thank you once again to all audience for your engagement, and we look forward to seeing you in our future discussion. Assalamualaikum and have a great day.